Hey guys, Jacqueline here with Zenith Home Loans. Thank you for joining me for another TCA Tuesday, Total Cost Analysis Tuesday. Today we are going to talk about the difference between conforming, high balance, and jumbo loans. You may have heard these conversations in the marketplace a little bit. I do have a lot of clients that will reach out to me and say, hey, I heard jumbo rates are better. The short answer is yes, usually, but their underwriting guidelines are a lot stricter. So depending on the client profile, sometimes a jumbo loan makes sense and sometimes it doesn't. So what we will do is the easiest way for us to kind of explain this so you can see the differences is to look at the options. So we're going to pull up our total cost analysis for the day. And I've set up a couple of scenarios, again, trying to keep things as simple as possible. I just did a flat 20% down on all of these loan structures for us. So the conforming loan limit for Denver Metro, so this is going to fluctuate depending on county, but for the most part, Denver Metro is going to be very, very similar. Further north, things are going to change a little bit. Further south, things are going to change a little bit. Boulder is a lot higher. So if you've got a specific property or specific county you're wanting to know about numbers, let me know and we'll adjust these. But greater metro area, these are going to be the numbers. So the national conforming loan limit for this year is $647,200, which means any loan amount at $647,200 and below is considered conforming. So that means you have access to 3% down loan options. So we can go 3% above this number. Underwriting guidelines are pretty standard. No major concerns as far as qualifications. As if you qualify for a traditional conventional loan, in all likelihood, you qualify for a conforming loan. So we're good there. High balance loan is going to be that threshold between 647,201 up to 684,250. So this is going to be considered your high balance loan. Again, this number is going to fluctuate a little bit depending on your county. This rate's actually a little bit higher than your conforming. So in most cases, it makes sense for us to make some adjustments as far as how are we going to structure the loan, because we don't want to have a much higher interest rate. As you can see, we go from 5.5 to 5.875 on that rate today. So maybe we look at a first and a second mortgage option. If we have the ability to put a little bit more money down, we can explore that as a scenario. So there's a couple of options we can explore there. Underwriting guidelines are pretty much the same as your conforming. The only thing that goes away is your 3% down option. So on a high balance loan, you have to have minimum 5% down. And there's going to be some fluctuation in there. So if you've got if 3% down would keep you in high balance, but 5% down gets you to conforming, now it's a conforming loan. So it's all about that loan amount. Whatever that loan amount is, that's going to determine the rest of the conversation. And then we have jumbo loans. So again, Denver metro area conforming loan limit. The high balance conforming loan limit is that 684,250. So anything above that. So 684,251 and above, that's going to be considered jumbo. So in those scenarios, you can do as little as 10% down. That rate is a bit higher because you're only doing 10% down. 15% down on a jumbo loan is going to be your very best option. These scenarios are set up with 20% down. So we go from an interest rate of 5.49 on the conforming. High balance is going to be 5.875, and then our jumbo loan is 4.75. The reason why that rate's lower is because this is a non-agency loan. So what that means is everything is dictated by the investor themselves. So what's nice about that is we can get access to better rates. What's not so nice about that is sometimes the underwriting guidelines are much more strict, much more harsh in what we're required to document. So they're going to have a lot more restrictions around first-time home buyers, reserves, so funds that you have left over after closing. If you're a first-time home buyer and this is your first home, then they're going to want to see more reserves, investor to investor. There's some investors that have minimum minimum credit score requirements. So some of them you can have a lower credit score, so under 700. For the most part, we want to see above 720 because that's just going to give us access to better rates. These are all 30-year fixed loans, but obviously you still have access to the ARMs. And there's some extra restrictions there that we need to pay attention to. There's going to be different requirements around commission income, bonus income, so any of your variable income, and especially if you're self-employed. So you're self-employed borrower in a jumbo loan territory, the restrictions, it's just a lot of extra documentation. So my best recommendation if you're a jumbo loan and you're self-employed is just to get everything done before you ever start looking at properties. Make sure everything is correctly documented and make sure that we've got everything set up with the investor, because every investor is going to be a little bit different of what they require and how they calculate your income and what documentation for the present year they're going to require. Most investors across the board are requiring income tax transcripts 100% on jumbo loans, high balance and conforming loans, those are going to be case specific. But fun fact, IRS is delayed about 5 weeks in turning these documentation around. So if you're looking to do a jumbo loan sometime later in the year, I'd recommend getting your pre-approval process going now. If you haven't filed your tax returns, you're going to want to do that sooner than later. Some of investors don't allow for extensions. If they do allow for an extension, you have to show that the extension's been accepted by the IRS, et cetera, and so on. So there are some additional underwriting guidelines to kind of pay attention to. My best recommendation for self-employed borrowers is just plan on giving me 100% of everything. Even if you don't think I need it, I probably still need it. So conforming and high balance, even if you're, especially if you're self-employed, there's a little bit more leniency there. So maybe we can do 1 year versus a 2-year history. Jumbo loans, pretty much across the board, you're going to need 2 years. So the reason why that interest rate is lower is because, as I mentioned, it's a non-agency. So it's not following Fannie Mae or Freddie Mac guidelines. So the investors can kind of dictate what they want those interest rates to be. And if you think about it, you're borrowing a lot more money. And so they're probably going to give you a little bit better of an interest rate. The high balance loans, those ones, I don't have a good reason as to why those rates are higher right now. The bank is doing what the bank's doing. And so in those scenarios, what I've been doing for clients is just showing them, maybe we don't put quite as much down. Maybe we do a loan amount of 685 and we just do a jumbo loan as long as they qualify. Or if we can get down to that conforming limit, or even doing a first and a second. So you can do a second mortgage to cover the gap between that high balance and the conforming. You do the same thing on a jumbo loan. So maybe you don't qualify for a jumbo. Maybe there's some restriction in there that keeps you from being able to qualify for a loan program like that. Doing a first and a second to stay out of those jumbo underwriting guidelines, sometimes that'll make sense. I have a handful of clients who are self-employed that maybe there's something in 2020's income because of COVID that the numbers just don't kind of jive out, but 2021, and we know 2022 is looking really good, but we don't want to kind of broach that subject with the jumbo investor. So that's definitely an option to look at too. The nice part about our jumbo loans is we underwrite a lot of those in-house. So we're able to get those submitted in front of an underwriter ahead of time so that you really know what's going on and what your options are going to be. But more than anything, I just wanted you to kind of see the difference in these, because been getting a lot of questions around these, and it's becoming a lot bigger topic of conversation because of the price point that we're seeing here in Denver and in Colorado at large. Is just kind of knowing, okay, where are some of these numbers going to fall? There's going to be some loan programs that don't qualify for these. So your down payment assistance programs aren't going to be viable for any of those jumbo loan territories. High balance loans, there's going to be some restrictions around those and things like that. So the best thing that you can do when you're getting ready to start looking at buying a home is know your numbers, know what your options are, know what you qualify for, and make sure that everything's been documented. Other than that, I hope this was helpful information today. If there's absolutely any other questions that I can answer for you around this subject or anything else that we've talked about or something you'd like me to talk about, let me know what that is. I need your ideas so I can get you guys the information that you are looking for.